Welcome back. Life insurance policies and especially term insurance plans are typically easy to obtain for healthy individuals who have no pre-existing medical conditions or diseases. However, getting a life insurance policy may be a little more challenging if you are someone who is suffering from a critical illness. So how can you get a term insurance plan? What is the process? Let's understand all of this with Mahavir Chopra, founder beshak.org. Mahavir, good evening and welcome to the show. We are talking about people with critical illnesses. How can they opt for a term plan? Because it's a zone which is not very comfortable for life insurance companies, definitely. But some time back, there was definitely no hope for people who are suffering maybe from diabetes or cancer or maybe severe critical illnesses. Can they buy a term insurance plan?
Right. So when you look at term insurance or any insurance product, you should try to draw parallel with taking a loan. Right. When one person takes a loan, there is a credit history or a credit score that a bank will look at before they give you a loan. Similarly, when you're buying a health insurance or policy or a term insurance policy, the insurer is going to look at basically your health history, your medical history, and then basis that understand the risk of how many claims they may have to pay. And based on that, they will evaluate whether they want to give you the policy or not. So yes, for people who have a medical history, for people who have, let's say, like you rightly said, diabetes or hypertension, it is much more trickier to get a term insurance policy than someone who's healthy.
Say tricky. What does that mean?
Yeah.
Maybe if we can just start with
I'll
cancer. Sure.
So,
Yeah.
so tricky basically means that you may have to apply to multiple insurance companies. Maybe there could be insurance companies who may not approve for your policy. That is the highest level thing where you could have a decline from an insurance company. The second could be an insurance company could charge you a loading, which is basically called in the insurance parlance, it's called loading. But what it basically means is that additional premium for the higher risk that you have, the insurer to charge excess premium to you year on year. So typically, let's say if the premium is 100 rupees, but let's say for the sake of the example, let's say 20,000 rupees. The premium for someone who has additional risk, let's say of diabetes or has pre-diabetes or let's say hypertension or even for that matter obesity, right? The premium could be between higher. So if it's 20,000 is for a standard life, for someone who has such kind of illnesses, it could range between 24,000 to 30,000 rupees. So they may have to pay close to around between 15 to 50% additional premium for the additional risk that they have because of the medical history. So that's what I meant by this trickier, that they will have to probably go to multiple insurers and they could also have to pay more premium.
So when we talk about multiple insurers, typically what kind of life insurance companies are we talking about? If you could just lay down the way for these kind of people, someone with even maybe heart trouble, because it's not only cancer, a lot of people also have cardiac issues. Even they find it difficult to get a life insurance policy.
Yes. So for critical illnesses, definitely insurers are way more stringent in terms of giving a policy. And specifically, if the person is, let's say, even at a higher age, let's say if that person is, let's say, 40 or above, and plus the person has, let's say, a cardiac disease, like you mentioned, a heart disease, or has some very critical illness, which is typically a serious illness. In those cases, there would be multiple insurers who are likely to reject your policy application, largely because insurers are also driven by something which is called reinsurance, where they are under terms with another larger insurance company, mostly in India or abroad. And they basically, based on these terms, need to issue a policy to you. And most of the times, the terms that are there between this insurer and the larger reinsurer that we talk about excludes such kind of profiles. So largely, if there is a serious illness, the chances of getting a policy, like serious illness is basically heart, cancer, or we are talking about a major surgery that has happened. In those cases, the chances of getting a policy are like 1 is to 10. Right? So it's 10% chances of getting a policy. But let's say you go a little lower in the scale of, let's say, the kind of illnesses that exist. and you talk about chronic diseases, which are regular diseases which can be maintained, like for example, hypertension, or let's say diabetes, or let's say thyroid. In those cases, the insurer may not decline the policy, but may actually charge an additional premium to the policy holder who is applying for the policy.
When we are talking about higher premium, Mahavir, what will be the percentage? And for someone who has a very long medical history, maybe, and if is denied term insurance plan from a lot of companies, what are the options for them now?
Yeah, so the reality is that for people who do not get term insurance, there is no other option available which is as good as a term insurance. Then what you will have to do is that either you have to talk to a financial planner and look at other modes of keeping reserves and savings so that your family is able to take care of themselves in your absence, or otherwise look at some if the requirement is not very high and you want to take a financial cover, then there could be other products like savings products and traditional products that are available with insurance companies, which could provide you a death cover, which could be used, but that has to be used with a lot of care, because the terms and conditions of those policies need to be understood very well. But these are the two options that are available for people who typically won't get a regular standard term insurance and may have to look at options.
Mahavir, now, do you think it's always advisable to have a rider along with the term insurance? If at all someone has a critical illness right now, can they get a cover, or it's advisable to just buy a comprehensive policy?
Yeah, so if a person already has a critical illness, the chances of an insurance company giving a critical illness rider is almost zero. No insurance company typically will give a critical illness cover to someone who already has a critical illness. So that is one. And on a general basis, if you're talking about riders, I think riders are an excellent part of an insurance product which allows customers to customize their policy based on their needs. So typically, the only suggestion we have to people who are right now young and healthy and don't have any diseases or issues is that they should first of all buy a term insurance quickly so they don't have to pay large premiums, loadings like we spoke about. And second is that ensure that they buy such riders, typically let's say even a critical illness rider, so that in the long run they are covered, A, and B, if they are looking at it later in their life when they have a disease and they don't find it, that is a risk that you can mitigate. So from that perspective, it is very, very important that as a young age, you should basically ensure that you have taken care of these things. And people right now listening to this video are able to understand that how difficult it can be if you have a disease and then have to buy a policy.
Do we have the kind of term insurance policies where there is an option to opt a coverage for critical illnesses?
Yes. So almost all term insurance policies have an additional rider option available where you pay additional premium and you can get cover for critical illnesses separately. So what does this cover is that basically if there is any kind of critical illness that happens, then the insurance company will pay a lump sum amount to this policy holder or its family for that diagnosis of that critical illness. This is different, obviously, from a death claim where there is a death that happens due to critical illness, which is anyways covered in a term insurance. So term insurance covers all deaths, all kinds of deaths, apart from first year exclusion on suicide. So it will cover you for critical illness related deaths also. Critical illness rider is an additional rider which will pay you for a critical illness diagnosis that has happened before, obviously, a death, and it will pay the family so that they can take care of the medical needs, the loss of earnings that happens because of a serious illness.
All right, so that's the way ahead. Thank you so much, Mahavir, for being on the show and helping our viewers with all the aspects of buying a life insurance policy along with the critical illness rider.
Thank you, Karan.
On that note, we'll take a quick break, and post that we'll talk about PPF. In fact, all the questions which are never asked about PPF will be discussed today along with your portfolio related queries, and I'll be having Harshvardhan Rungta with me after this break who will do your life financial planning as well.